questions. I've been in IE for around 2 years now, approaching 2 years, 1.5 years. So yeah, it's been a crazy journey. And you know, we haven't stopped. We've got loads more to achieve, and loads more to you know, aspire towards. You know, there's some crazy traders out there. But yeah, that's pretty much it from a journey point of view. Feel free to ask questions in the chat. I'll literally answer them as I go through. Let me just load up the chat on a separate. Let me just load up the chat on a separate one. Just give me 1 second, guys. Yes, okay, so you should all be able to now see my chart. Looking at NQ. So you know, I don't trade all my prop accounts at once. You know, that's a bad thing to do. You will end up like psychologically like losing those accounts. I trade like 2 to 3 at a time, maybe one prop firm at a time. So right now I'm currently milking Top Step. I've now moved to Alpha Futures, where I'm now focusing on just those 3 Alpha Future accounts. But yeah, guys, let's get started. Let's get into the good stuff. You know, I only consider profitability in trading once you've worked out your expenses to your profits. I did that the other day actually. So the amount that you've spent on courses and prop accounts versus your outgoings and your to compare to the profits you've made through trading, I would say I've been profitable for about a good eight months. You know, so fairly early still in this journey. You know, 8 very good profitable months, like solid percentages each month. So yeah, let's get into the technicals. So I'm gonna just start by focusing on NQ, so NAS 100. And if you want to pull up the chart as well on your computers, so you can follow price through. This is recorded, so you can go back as well. So the first thing that I want to look at is if we look at NQ, okay, what NQ did last year, so 2025. You can see how we spiked the previous year's low, so 2024, and we've been bullish ever since. So you can see how the market reacted, and we had this massive bullish move up. Okay, and so if we go to our weekly chart now, and remember, price is fractal. Whatever's happening on the higher time frames happens on the lower time frames. It just took much longer for those candles to print. So let's have a look at this. So you can see how sellers were induced after this move down. Look at these big bearish candles. Okay, so you can see how sellers were induced, and then what did we do? And this is what our strategy is based on. Our strategy is based on liquidity. We are liquidity based traders. We only trade once liquidity is taken. And Marco and Abid have come up with a model. You know, we use words like inducement low, inducement high. These are literally just highs and lows in the market which we focus on. So for example, if I just quickly break this down on the weekly time frame, okay, before we even broke structure to the upside, okay, so let me just zoom into price so you guys can see what I'm talking about. Let me just check that my screen is being shared. Guys, can you hear me? Yeah, okay. May, I think it's just you. I think it's just you. Okay, So I'll continue. So if we look at this, and this is what I do when I approach the charts, okay, the first thing I do is I look at straight away from the weekly time frame, okay, I look at who has been induced in the markets via break of structures. So as we can see here, okay, price broke this high. That is a break of structure, okay. Now we and our strategy, we do not trade this price action here, okay. We do not trade this price action here, and everyone in here should know why. Okay, this is trading with retail, okay, even though it's made higher highs, okay, this is still part of the same leg, okay. So if I just highlight what I'm talking about here, from here to here, okay, I will not be looking for buys, especially after the high being taken, okay. Now look at what price did before this, okay, and this is what I want us to focus on for this first part of the webinar, okay. Price has engineered liquidity, okay, if I just take the whole candle, okay, and when price reached this area, okay, you can see how just by focusing on this candle here, okay, this big bullish red candle, you can see how we sold off, okay, inducing sellers, okay. Now once that sell-off has occurred, or we've reacted from the left, okay, what we've done is we have now got liquidity above here, even though we already had that, okay, we've created even more liquidity. We've made that a stronger liquidity point, okay. And so what price then did straight away, look at it the next week, okay, you see this bullish move up, trapping all of those sellers that have been in the market. Now this creates our inducement low, okay, but it only creates our inducement low, okay, once we react from it. So you can see if I just highlight this, let me just get a highlighter tool so you guys can see what I'm talking about. You can see how okay, so you can see how we've reacted to this low multiple times, okay, multiple times, okay. I can take the whole candle anyway, okay. So we're talking about this low here, okay. I'll remove this yellow part so you guys can see what I'm talking about. So once we've reacted multiple times to this low, okay, you can see how we went bullish ever since, okay. So we made all-time highs, and then what happened? The market sold off. Where did it come to? Okay, it came and took out that inducement low, okay. And this is literally the model simplified on a higher time frame, where you have a build up, okay, trap, okay. So the build up is here, okay, we respected and moved away. We then had a trap, trapping our sellers, okay, and you can see how buyers are now induced, and then the same thing happens, okay. We sell off, false sell off, inducing sellers, trapping those buyers, and now we're moving back up, okay. So that's it from a sort of weekly time frame, okay, and that is the model that we're looking at. For those that like diagrams, what I'm basically saying is happening here is we're reacting. So we've reacted multiple times, okay, and moved away, so we sold off. Price then came back, okay, revisited that same area, okay. We then had a sell-off, okay. We then broke structure, made new highs, and then came back for that inducement low, and then made highs again. So what I'm basically saying is this is what's happened, okay. So here is the high that I'm talking about. We respected it multiple times, okay. We even moved away. Once price breaks that structure, okay, and respects it, okay, price will come and revisit that, okay, and then we can then look for our buys back up, okay. And that is essentially our model. That is what we use on a day-to-day basis. So I use this model for direction. I also use this model for entries. It's the exact same thing, and this is the only model that I know that does this, where direction and entries are the exact same. Whatever we look for on the higher time frame, we're looking for on the lower time frame. So with saying that, let me go on to recent price action. Okay, so from a weekly time frame, so we'll look at just December's price action and see what's happened, and then I'll go on to this week, where not much has happened due to, Christmas, New Year's Eve, then the start of the year. So I did take a trade on NQ this week as well, which I'll go through. So just quickly load up any questions. So okay, so again, looking at it from the same lens that I've been talking to you guys about, okay, what am I looking for when I approach the charts? Can someone just tell me in the chat, what am I looking for when I approach the charts? Who can tell me? Come on guys, there's loads of you in here. Who is induced? Yes. Okay, that is the correct answer. Who is induced in the market? Okay, that is what I am looking for. So first things first, okay, if we just go through this together, we had buyers induced, okay, so buyers in this market all the way up, and then we trapped all of those buyers, you can see here. Okay, so buyers induced, buyers trapped. Okay, so that's the first thing I look for. Now if buyers are trapped, we now have sellers induced in this market. Okay, now what does that mean? That means any reactions that we have in this leg down are false. They may be big reactions down, they are still false, they're temporary, and that is why I am expecting, okay, and this is where we need to tie it with liquidity, okay, and I'll come on to the lower time frame. So from a higher time frame perspective, so higher time frame, I'm talking about weekly, daily, 4 hour, especially as a day trader. I'm looking at it from a daily 4 hour perspective, and in the 1 hour, 30, 15 and 5, I'll look for entries. Okay, so we induced sellers, okay, on a higher time frame. Now remember this quote is super important, and I'll show it through the charts. In order to move higher, okay, so in order to move higher, we must induce lower, okay, and in order to move lower, we must induce higher. Okay, this is a quote that I live by. I have it written down. What I mean by that is this: we induced buyers, okay, on this leg up, okay. In doing so, we have created liquidity. Okay, what I mean by that is, look how many buyers were in this market. Okay, just by looking at where we're respecting lows. Okay, so all these buyers, we even had this move up, so there is lots of liquidity, okay, below this low. Now what I am doing, okay, is I am now, once I've figured out who's been induced, so we're just starting on the left here, we had buyers induced. If I know buyers are induced, I am not looking for buys, and that is how I determine my direction. I'm not looking for buys anymore. I am simply looking for sells. Okay, now there are times as you progress and become advanced with the technicals where you can take counter bias moves, but if you are a beginner or semi-experienced with this model, always just look for our pro bias move. So we're talking about, we're looking for sells on the way down. Now watch this, okay, this is super important. Look how after we see this red candle, and we can see straight away on the higher time frame. That's why I like spending time on the higher time frames. You can see how, if you look to the left, we have respected this high multiple times. We have not taken this high out, okay, and that will be a future target. So look, we're moving lower, but we're essentially engineering liquidity, okay, to the upside. And so what I saw, and this is a trade that I actually took, okay, is what I saw was I'm looking for sales, okay, price, I wait for price to come into retail POIs. These could be fair value gaps, order blocks, these can be support, resistance. I just wait for the majority or the masses to get involved in the market. So look what happens here. Okay, so on Friday the 14th of November 2025, you can see how we had a bullish reaction up, and then we trapped those early sellers. This has created a liquidity block. What I mean by that, and we can touch on what a liquidity block is we can see how a low was taken and then a high was taken. So what I mean by that, again, I'll put a diagram here. It's like this. Okay, so a low being taken, a high being taken, okay, and that is what forms your liquidity block. And that's the ones I focus on, where, for example, a low has been taken and then a high has been taken, okay, and so this will be a liquidity block for me, okay. And so I saw that and I was like, okay, so we've trapped some early sellers in the market, we formed a liquidity block. If I just go now to what price did, and this is a trade that I've actually taken. So look, we have, and this is what our A star or A plus, whatever our setup is. We have engineered liquidity to target. We have pro bias move, so we're looking for sales down, okay. We have a liquidity block form, okay, which we can also call our inducement high. Okay, I'll come on to those in a second, but this is our liquidity block. Now, what am I waiting for? If I go down to the lower time frames, okay, so this was my liquidity block that formed. I'm literally looking at a build up, okay, so liquidity block has been formed, okay, which is basically, I'll just put a new one here. So here's the liquidity block, okay. What have we done in this move? We've induced buyers, okay, and we have also got sellers in here. That's what a build up is. A build up is literally in the word, sorry, we're building liquidity, okay. And so I'm just marking out where I see price has respected multiple times. So you can see these 4 candles respecting this high, okay. We moved away. That indicates to me we now have liquidity above this. We do not have liquidity above this. This is our safe place. This is where we can put our stop loss, okay. So if I just show what then happened, okay, so we're now on Wednesday. Now look at this, super important. This is what I love to see, okay. As price approaches that build up or that inducement high, look how the market gave a reaction, inducing more sellers. How do I know that? We had a break of structure to the downside, okay. Now that break of structure to the downside, okay, what did that result in? Okay, we have more liquidity above here, okay. We're approaching New York Stock Exchange, and look what happened, okay. So this is where I took my entry actually. So I had my entry there, my stop loss, because in the futures market it's exact prices, it's regulated, okay, so I keep my stop loss above the high. In the CFD I would leave a few more pips, or a few more a few more pips, just for spreads. And then what am I targeting? Well, if I look to the left, I have all that engineered liquidity. I know that we have a build up here as well, so what I would have done is taken maybe 95% of my position there, okay, because price doesn't always need to take out that engineered liquidity. You can even build it a bit more for the next day. So I make sure I've paid myself, okay, I've taken profits 95%, and then I leave a runner, okay, to my remaining target. And so if we just play out price, you can see price then takes that liquidity, okay, and on a higher time frame we can see that. And that for me, okay, is a really good setup where I have loads of engineered liquidity to target. I have buyers induced, or I have a false move up clearing my build up. I have a liquidity block to the left, okay, and then look at the reaction we have down, very explosive, okay, price just melting from there. And that's one of the best trades I've taken in the past 2-3 months. Yeah, so let me just look at some more questions. So who is trapped? Yeah, a big structure. Why? How many trades do you take a week or month? So I take in a week I'll take 1 to 4 trades. Yeah, 1 to 4 trades in a week. Sometimes it can be 1 to 2, and less is more for me. Okay, if I can find a high probability setup and I wait for that, and I wait patiently for that, that will make my whole kind of week or month's profit. Okay, so for example, in this trade here, I believe it was like a 9k trade or something like that. You know, that's made my whole 2-3 weeks profit. Why would I chase smaller trades that are low probability or not as high and risk losing money when I can wait for my high probability conditions and setup and earn more money, i.e. a higher P&L for the week? And my confidence in the strategy will just boost up, because I know that in high probability conditions and setups I have more chance of it playing out than me just taking those. You know, there's some traders that, for example, and I can show you guys what I mean by this, is this isn't wrong, but if you look at this, if we say that we've taken liquidity, okay, we've taken liquidity and we have a liquidity block below, that's not wrong, okay. So for example, we can see how the market gave a reaction out, okay, clearing liquidity. It's not wrong, however, that's low probability for me. Why? Because I am trading counter bias, right? I'm trading where buyers have been induced. Okay, so even though we've trapped some buyers, we've not taken all of the liquidity from the left. This image here literally explains the difference between a high probability and a low probability setup. Okay, why would I be looking for example, buys in this area? Okay, if I know we have liquidity below, that doesn't make sense to me. So I wait for those high probability conditions, okay, and look at the result that we get from it. Okay, so that was essentially in November. Can you point the steps one by one for an A+ setup for you, and what is not an A+, and what is not an A+ setup? Yeah, I literally just explained that. So literally step by step, I can say it to you guys so you know what I'm talking about. A+ setup is a Da Vinci setup, okay. Literally go back and watch the Da Vinci video on the WAP. We have engineered liquidity, we have a false move up, liquidity block form. So look, engineered liquidity, false move up, liquidity block forms, build up taken. This should form another liquidity block, okay? And then you wait for the same thing, build up taken, take the entry. So this would be like an extreme entry. This now forms another liquidity block, and if you were really patient, what you can then do is, after forming that liquidity block, I didn't actually check if there was a confirmation, I doubt it because of the volume pumped. Yeah, no. So then what you would do is you would wait for a confirmation entry, okay, around here, and put your stop above that liquidity block, and that would be your A plus setup, okay. Yeah, that's pretty much the difference between an A plus and you know, a low probability. And how long do you look at the chart in a day? I literally trade from I don't even actually look at the charts until around 2 p.m. which is UK time, which is 9 a.m. Eastern Standard Time, I believe. And then I start trading actively around 2:30, which is 9 to 8:30 for Eastern Standard. Basically when New York Stock Exchange opens, until around 5 p.m, which is 12 p.m. Eastern Standard. And then if I see that market has just built liquidity, I do hop on, especially in the futures market, for the PM session, which is 2 p.m. Eastern Standard, to just see if we have liquidity to target. I do not, and this is something that I've really learned this year, or last year I should say, I do not take trades if there is no engineered liquidity. It's as simple as that. If I don't see liquidity being engineered in the market, you won't see any trades from me. And even if you look at on the Discord, the trades that me, Abid, Marco take, we will never be targeting something that doesn't have engineered liquidity. That is your step one, identifying that, okay. So yeah, that's basically what happened then, and I can go through what we've done in most recent sort of weeks, and what I'm looking for on NQ. So I'll quickly you know, skim through that, because this is super important. So this is where we were. So this is the trade that I took around here, shorting, and we induced sellers. Now what's really interesting to me is this, okay. After inducing sellers in the market, we've got more sellers, okay, which have been involved in this market, okay. Now this is where you need to be really focused, okay. This is super important. Watch this, okay. So once sellers were induced, okay, what I like to do is mark out where I think sellers are going to be taking positions from. So this is an example of one, this is an example of another. And why am I marking these specific candles or wicks? Because this is where, again, I will put a highlighter tool. This is where, and again, you'll train your eyes to see this many times, okay. So why did I mark those? Because we have respected a high to the left. So look, all of these have respected this high to the left, okay. So once I've marked them out, I like to see reactions from them, okay. So if we now go down to the lower time frames, you can see how, if I look at the first one, okay, so if we just take this whole candle, you can see we're just building sellers in the market, okay. We're getting reactions down, okay. This would have been a good trade, you know, just by looking at this on the 1 hour. So look, we respected liquidity, moved away, broke structure, created a liquidity block, induced buyers, trapped them, I would have taken an entry there, liquidity block there, and then targeted the engineer liquidity, which is here. So like a 1 to 5, very quick as well. So yeah, like you'll train your eyes to see this, okay? But anyway, as I was saying, not to get off track here, you guys can go back and back test this. But what we then did, okay, so look, we've got a build up in the market right now, okay. But what's really interesting to see is look at the candle that I marked out on the daily time frame. That is an inducement high. Okay, why is this an inducement high? Okay, and I get asked this a lot, especially the way me and Elijah trade. It's quite similar in a sense where we're looking at those inducement highs and lows. All an inducement high is, okay, is before we broke structure, we induced buyers. Okay, so I'll mark that out. We induced buyers. Okay, we reacted from it many times before. So after, look, we broke structure, we then reacted from it many times, and look, once we took out that inducement high, and this is so precise, we took out that inducement high, okay, and we essentially induced higher once more. So you can see that through the break of structure, and then we had a sell-off. Okay, this just means that this 26140.75, okay, or even to make it a bit more precise there, 26127.25 is a strong point of liquidity. That's something where the market will definitely revisit. Okay, so we sold off, inducing more sellers. Okay, however, what we've also done by breaking that inducement high is we induced buyers in the market. And why again am I marking this? Can someone tell me why I am marking this low out? Why have I marked this low out? So Tuesday 25th, why have I marked that low out? Can someone tell me? Correct, it's an inducement low. Yep, liquidity. Price reacted from it, inducing buyers. Yes, well done. Okay, well done guys. That is what we like to see. So look, price has reacted from it. Again, what do I want to see? How do I know buyers are in? We've had multiple break of structures to the upside. Okay, we have buyers also in this market. Okay, so what is an ideal setup for me now? This is where price is. I'll go through the trade actually that I took. So in fact, let's just quickly touch on the trade that I took this week. So price has reacted. So again, look, if I was looking at this from a lens, starting from a blank screen, okay, so I'll just clear my drawings. Okay, I know that we have liquidity up here. I know we've taken this inducement high. Buyers are induced. Okay, I'll put that here. Okay, so buyers induced. Okay, we also said that we induced buyers here and we trapped them. This is a higher time frame liquidity block, this whole area here. Okay, so induced buyers, trapped them, induced sellers, had a move up, induced buyers. Look at all these buyers in the market. What did the market do? It came to an area which respected buyers, okay, and moved away. We had a break of structure to the upside. I'm just going to write buyers here, or I'll write it buyers induced. Okay, if I know on a higher time frame we have induced buyers, guys, what am I looking for going into this week? If I know we have induced buyers, Look at these candles. What am I looking for? Sales. Yeah, simple as that. To short. Where am I shorting into? I am looking for shorts into our liquidity. I've marked that liquidity point out. So look, I've now got a framework here, okay, where I can now see very clearly on the higher time frame what's going on. Now, what's something to be aware of with NQ, okay, is that we've got liquidity above and we've got liquidity below. So I cannot just say going into this week, because we've induced buyers, I'm going to be just targeting there. And that's exactly what price is going to do. No, because what price could have done, and this is what I was looking at in fact, what price could have done is, for example, induced more sellers into the market and then taken out all of those sellers. So price could have gone that way as well. So what are we? We are reacting to the market. We are not predicting, okay? Because there's two liquidity points here. This is why I was very cautious with NQ this week as well. But let's just go through what price did. So we induced buyers in the market. So now when I go down to my lower time frames, okay, watch this. We induced buyers, okay. Now we have buyers. If I just mark out my inducement low, we have reacted from this area, okay. So we reacted from this area. We also reacted from this area here. So again, I'm marking out points of where essentially the majority of people, banks have got in, okay. Banks also lose, you know. So we can see how we had this break of structure to the upside. So look, price reacted, we moved up, we took a high to the left, okay. Another way you can see it is what I drew before. We sold off and then we took out some early sellers, created a liquidity block. Okay, so once we create a liquidity block, what is the next step? Can someone tell me please? What is the next step after you see a liquidity block? Build up. Perfect. Now watch what price does. Okay, watch what price does. We start hanging around. Okay, the market is purposely doing this. Okay, we're reacting from a very key level here. Okay, this is where buyers were induced from. Okay, so look how long price just reacts. Okay, we then have another break of structure up. This has convinced buyers, okay, that we're moving up, okay. And look what price then does, okay. Literally, I would have taken this, but the timing's quite bad for me, and plus I believe it's the 30th of December. But anyway, look what price then does, okay. We sell off, okay. Where do we sell off to? That's very important. Where do we sell off to? We sell off to that inducement low, okay. Super important. Look at why we mark out these inducement highs and lows, okay. Because we react from it, creating liquidity below. Price then targets that liquidity, okay. And we've now, what have we now done? Can someone tell me, after taking this low, what have we now done? Can someone tell me? Induce sellers. Perfect. We have induced sellers. So what am I going to do? I am going to now mark out where I believe sellers are going to take positions. So straight away I know this is an area where sellers are taking positions. Here's an area sellers might take positions in. Okay, these are all traps. Okay, Now look at what price does. Okay, this is all a build up to me, by the way. We've respected this high to the left. Okay, and this was my only entry for NQ this week. You can see how we took that inducement high. Okay, we reacted off all of these lows. You can see how sellers are in the market. We had this massive bullish move up, inducing buyers. Okay, what am I looking to do? I am literally, we've trapped all of those sellers. There's a liquidity block there. Okay, and so what did I do? Okay, I took a sell from here, covered my stop loss, and where am I targeting? That's a good question. Remember, I am always targeting engineered liquidity. Okay, I'm always just targeting engineered liquidity. Okay, and so I basically, I think it was a Friday. Yeah, this was a Friday. So what I did was, I think I was targeting here. Yeah, I think that's what I was doing. I think I left a runner. So I took partials after we took this low, and then I basically was waiting for this to go, and that's where we are right now. Okay, so what do I see happening with NQ? In fact, I took two positions this week. I took this sell as well, and I took this sell to this low here. Yeah, these were the two positions I took this week on NQ. Okay, so the timing was a bit bad. It's about 4 p.m. UK time, which is about 1 p.m. I believe, Eastern Standard, and this is the second sell. Now I do expect price to come to these lows. Okay, but if we look at on a higher time frame, what is ideal? What's an ideal scenario? If I just clear my charts, this is what I'm looking for going into next week. So if I just mark out what we have done, we've induced sellers, we've got engineered liquidity to target, we also have engineered liquidity there, and this is what keeps me so focused. And look how many opportunities I took last week too. Literally, I find my high probability trade setups and I focus and I just take them. Okay, and this is how you stay disciplined. I am not going to be doing anything, okay, until I see a high probability setup occur on NQ. Now we've got two liquidity points. Price, ideally what I would like it to do, which I hopefully am forecasting this, is I believe price is going to come as deep as this liquidity block here. I think we still see a sell-off, and then I think we run to those highs. That's what I would love to see. Okay, I would love to see that. Okay, but what we can also see happen, we've got to look at all options. So that's the most probable scenario, where we take out these lows, inducing more sellers, and then we look for entries on the way up, and I will hopefully capitalize off that. What we can also see happen, if we look at the 4 hour, what we can also see happen is this, where price has already taken that low. We can see price take out this liquidity and then move higher. So what liquidity am I talking about? Look at where we respected those lows. Okay, where we can also see a buy from here. And this is what I hear a lot, especially in the community that we're in. I hear this question so many times, so I'll just address it. Why did price come? How did you know to take an entry from here and not, for example, from the liquidity below? And this very simple answer is, I react to price action. If I see price come through here and move away, I will wait for a confirmation entry to the highs, and if it still goes lower, I'm willing to take that loss. That's why risk management is key. Ideally, the most probable scenario where all the inducement is taken from the left, okay, and then we see that move higher, okay, on NQ. And that's basically breaking down NQ. I know this pair very, very well. I know when to take a counter bias trade. I've traded this pair for almost a year now. Okay, I know the pair inside out. I know how it likes to go to these extremes, and NQ does this a lot. It goes to the extremes, respects liquidity blocks. What I mean by that is, look, I know this pair so well that here's a liquidity block. Price didn't even take that out. If I just put a yellow line there, look how price respected that, came to the extreme and sold off. So I just know this pair very well. I know how it moves. I know how volatile it is. I know what happens before New York Stock Exchange. There's normally a sell-off that occurs, inducing traders the other way, and then price reacts. I know also on NQ that the next 4-hour candle that opens at 10 a.m. If I see a spike of 10 a.m. spiking the previous 4-hour, so look, I'll give you guys an example of this. I just know this pair very well, so I know if I see a spike of the 3 p.m. which is the 10 a.m. candle spiking the previous 4-hour, we then sell off. Okay, so you just got to know your pair. That's why I say to focus on 1 to 2 pairs. Okay, and that's what we essentially want to see. Okay, and those are the steps. You have to build a framework around your trade idea. You know, we come up with so many ideas. You know, we want to come up with the highest probable sort of story to what price is doing. Okay, I'll look at some questions now. Yeah, I am beginning to get into Forex. Okay, I have just passed stage 1, I believe, of a Alpha Capital account. I will be looking at Forex only for long-term swings, where I'm able to hold to higher time frame target. So what I mean by that is, if I know that we have a higher time frame target, okay, because I trade future prop firms, I have to close at market close, and sometimes I am not able to capitalize on the whole move, especially with the strategy we have. Price generally visits our higher time frame targets, so that's something that I'm looking into. I will just be looking at swing positions on my FX account. How much risk do you take off your account size per trade? Very, very good question, which again, risk management is so key. I cannot explain the amount of times where you over risk because you think it's a high quality setup and then your account just gets into drawdown or negative. I generally risk between 200 to 500 on my accounts with lower capital. So for example, if I'm trading a 50k account and I'm up, for example, 3,000 or $3,000, I will trade between $200 to $500 on that account. Okay, if I see a Da Vinci setup, I might risk around 750 max. Generally try to stick it to 500. And if I trade a large account where I'm up, for example, $15,000 to $20,000 on my prop account, I will trade 1 to 2%. You know, I don't mind if I've got a buffer. I will trade quite big size, and so that's why I've kind of learned to use the minis on NQ. But I always will recommend sticking to the micros until you have a large buffer. So this year, thank God, you know, one of my top step accounts, I took it from 0 to 100k, and when I was on that 80 to 90k capital, I was risking like $2,000 per trade and stuff like that. I was risking 5 minis on a trade. So you can do it and you can mess around a little bit when you've got the capital, but on some top step accounts, I'm risking $200. So it all depends on the buffer you have. I would never over risk though, especially when you're building capital in your prop firm account. And that's how you get to payouts. You know, the stats are like majority of people don't even get their first payout. And I think it was around 90%. So um, do you risk different on personal accounts? I actually don't have any personal accounts at the minute. That is what I am building. So the payouts that I am getting, I am building a personal account, solely because I don't really like the rules that I need to stick to for prop firm accounts. Um, Consistency rules. I have one alpha standard account which has, I believe, a 40% consistency rule, but no, I avoid all consistency rules. I'm trying to get big trades, big wins, and take my money. You know, I'm trying. At the end of the day, we are in this game to make money. I will, if I risk a lot, for example, and I know this is a high probability condition, I make 5k in a day. I don't want to then have to make another 5k to take money out. So no, I try to avoid prop firms with consistency rules. Top Step don't have it. Alpha Futures Advanced account doesn't have consistency rule in funded either. So those are the two I would recommend, especially as a beginner. No, I mainly market execute. Um, Pratap, how do you trade same setup in multiple group of accounts? Just use a trade copier. Um, yeah, I think I have accounts with Funded Next. I've not actually used them. Do you set limit or market? Mine are mostly market executions. Okay. What other questions do we have here? Can you answer my question about the earlier LB on the last short you went above for stop? What question was that? Bro, when sellers are induced, why do you still consider the purple color LB a valid LB to sell from? Isn't there liquidity already? I'll go over that, Mike. Give me a second. Good question. Yeah, feel free to ask your questions now, guys. Any charts you want to send in, any pairs you want me to look at, and just if it's to do with our model, feel free to ask questions. But yeah, Mike, to answer your question, yes, this LB was respected here. So you got to remember, so yeah, this LB was respected, but in respecting it, what did it do? Sellers induced, and then we trapped them. This was another LB. Okay, so if I mark that out, okay, and then look how we respected this LB. Okay, so what we're doing is we're focusing on where liquidity is present. So look, sellers were trapped here. Okay, and so what we now have is, yes, this has been respected. Ideally, the highest probability would have been for that to be taken, but once I saw what price did here, where we induced sellers, okay, so look, we induced sellers, and then I saw that trap, okay, I was willing to take that risk. So if I see a trap before the LB, okay, I will take that. I will risk less, but I'll take that. And I did risk very little on this trade here. That is not a high probability setup though, this one here. I just took it on Friday. There was no buy entry on the way up. I was looking for buys to those highs, okay, but there was nothing for me. So once I saw that high get taken, I did want those sells. I hope that answered your question. Okay, so more questions. Bro, is that LB right? It's gold from yesterday. Okay, let's look at gold. So with gold, okay, so looking at the gold market right now, remember what I've been telling you guys, we are liquidity based traders. If I don't see liquidity on the chart, why am I going to trade this asset? Anyway, let's go through it. So we reached all-time highs, had a sell-off. Okay, in fact we took that inducement low. I'm hoping you guys are starting to see the pattern of how I trade. Why is that an inducement low? Look how many times we reacted from it. So look, step one, who's induced? Sellers. Okay, sellers are induced here. Yeah, we've taken this low from the left, this inducement low. We actually have a build up here, which is nice to see. Okay, so we have a build up there. You can see how this high respected this high to the left. Okay, so that's there. Okay, and then you can see how we've had, after this sell-off, sellers come into the market over here. We sold off, I believe, on Friday. Yep. I will not be taking anything until I see this inducement low get taken. So this is a LB, but where the reason, does this even make sense? Hold on. If the R don't make sense, I won't take it. Yeah, I mean it does have a minimum RR3. So yeah, that's something I'd look at. Okay, that's something I'll definitely look at. But again, it's at an extreme. Gold has had a massive sell-off. Okay, I don't know if that is something I'd risk a lot on, but I definitely, and that definitely fits the model. So look, we have engineered liquidity to target, we have an LB form, and we have a build-up. Okay, so it fits our rules. So why not just take the trade? You know. Yeah, if I miss an entry, I'm waiting for a confirmation. Man called me Abid. Abid, can you look at the picture I sent in and explain why Abid said the first LB is without structure? Can you just send that image in again? I'm just looking. Guys, if I've missed your question, feel free to yeah, feel free to put those charts back in. The first LB is without structure. The first LB is without structure. Are you talking about this LB here? Oh, you're talking about this LB here. No, that's with structure. I would never take that in a million years. So you're talking about this. It broke structure, and then we respected and moved away. Yeah, I would never have taken that, bro. That is literally with retail. BOS up, respect, move away. So we now have liquidity below here. That's what I'm waiting for. You want to see that liquidity taken, especially with, I believe, Trump just bombed Venezuela or something like that. I can see gold moving higher. I don't know. We'll see. Again, I don't predict. I don't do that. So after LB is made, you wait for a build up, then liquidity to be taken. Yeah, build up is liquidity. The build up is the most important part of this strategy. Okay, the build up is the most important part of this strategy. If we don't see a build up, and if we don't see liquidity taken, there's no trade. Literally, that is as simple as how systematic you got to be. If you do not see a build up, you do not trade. Okay, don't blow your accounts. Exactly, the build up is the fuel for the move. Exactly. I mean, I can go back and show you like examples. In fact, let's go into something I've been looking at, which is something I have been looking at. which is the crypto market. This is why I love the crypto market. Watch this, guys. I'm hoping you can see my screen. Yeah, alright, cool. So look, very simple stuff here on Ethereum, okay, is where we've induced buyers on a higher time frame. So we're looking at the weekly, so this could take quite a few weeks to play out. Look how we've induced buyers, okay, watch this. We have a massive build up here on these lows. Look how price has respected this low so many times. I would love for Ethereum to come, and I've had this marked for ages now, 879.8. that is the build up, okay. And even if you look at most recent price action, if buyers are induced, and I know buyers are taking positions from here, and it's also given me a break of structure to the upside, I can mark that out as a liquidity block. Like that. Okay, so there's my LB. Okay, if I see price, this could be a good trade. If I see price above that high, that might interest me to take a short all the way down to, look how we're building liquidity. That could be nice. That could be real nice. But yeah, that's Ethereum. I'm looking for shorts, and for those interested, this is a long-term investment I'm looking at. Obviously not financial advice. If you look at this massive build up, if I go in the weekly, I've had this marked out for ages. Look how we respected this candle multiple times. If I see price go below it, you can see how we've engineered liquidity to the upside. Remember what I said, in order to move higher, we must induce lower, okay? So we're inducing sellers. Hopefully we take out this low and then we see that move up. So yeah, really sort of, I look at any asset, you look at any chart, and I'll be able to show you what's going on. Yeah, you can rewatch this webinar. It will be on the WAP as long as you are a member. You can essentially you can rewatch these webinars. Same thing. Yeah, well done, Saji. Can you talk about Solana? Yeah, Solana I have marked up as well. So buyers induced, same thing. Look at that. Look, literally, this is what I have. Buyers induced on a higher time frame. Buyers induced again. Massive build up. If we see 78.14 taken, I might load up on some Solana. Look how we've built liquidity to the upside. I can see new all-time highs, man. Yeah, look at that. So if you look at the highest price that Solana made was $295. If I can buy it lower than 78, why not? Why not? Okay. Alright, more questions. Come on, guys. Feel free to ask your questions. Now is your time. You have all the time with me. Hey Adam, when you call a 2-candle formation liquidity block on a higher time frame, in other words, previous high taken, are you thinking because in lower time frame there must be BOS occurred? Yeah, exactly. Essentially, sellers and induced and then trapped. Yeah. Adam, I have a hard time identifying the liquidity blocks from the candle, an area where buyers and sellers are induced like a sweep from both sides. Yeah, I mean, I can touch on liquidity blocks for those that struggle with liquidity blocks. So alright, look, this is a liquidity block. Yeah, let's draw it like that. So this is a bearish one. Okay, that's a bearish liquidity block. Anytime you see sellers induced and then sellers trapped, that forms your liquidity block. Okay, you can either trade directly off that, okay, or what you can do is you can wait. So if price comes back, for example, let's say we engineer liquidity to the downside and price comes up here, okay, you can then short that down. Okay, so that could be an entry. Okay, so that is your essential bearish liquidity block. And if I was to do a bullish one, oh, I did that wrong, let me do that again. So buyers induced, buyers trapped, liquidity block. Literally, price is fractal. If you see that on the 1 minute, you can take that on the 1 minute. You know, if you see that on weekly, you can take it on the weekly. Okay, that is literally like, I hate that question of what is a liquidity block. That is a liquidity block. If you want to see, I would wait for that low to go, and that would be your liquidity block. Now I'll show you a high probability one. Watch this. We will even go to the fight. This is what I mean by price being fractal, by the way. Okay, I'll show you guys an example. Remember what I said about a bullish LB? Buyers induced. Okay, I'll just remove my line. Buyers induced, buyers trapped. Okay, so buyers induced, buyers trapped, liquidity block. That would have been a nice entry. We stayed below that high, came back in to the liquidity block. If you can get in there 9-10 in the morning there, that would have been sick. Or a move out, probably targeting just, yeah, here. That would have been cool. But yeah, it's very simple stuff. Okay, liquidity blocks are everywhere. You want to take the high probability. Okay, you just want a high probability liquidity block. We're not magicians, by the way. We don't know if every single liquidity block is going to hold. Sometimes it doesn't, and that's the nature of the markets. We lose sometimes. Okay, more questions. So you think it's possible to trade this strategy on Asia markets? Because the Asian market is sort of mostly building liquidity, I would say the only Asian market I would trade is the gold futures market. Gabba, bro, sorry for asking again. I still don't see how it is an LB with structure on gold. I just showed you, bro. Your picture literally shows there's a break of structure and price returns to that area. Based on what I've understood on lower time frame, yes, it is an LB higher than structure versus liquidity block. Alright, I'll give you guys another example. Okay, cool. So if I draw this out, hopefully this makes more sense. If I draw this out, in fact, let's use the Okay, this is a liquidity block. Would I take a trade from here? No, that's invalid. Why? Gabo, this answers the same question you're talking about on gold. It took a break of structure to the upside. Okay, higher time frame always holds weight. If you see a 15-minute break of structure, for example, and price returns to this area, it might give a reaction out, inducing buyers. So it might give a reaction out, but it will be temporary. Price will then come back to take it. Okay, so that is an example of an invalid LB. Okay, that is an invalid LB. Okay, so once, yeah, that's an invalid LB, and then if I show you an example of a valid, same example, so we create an LB, build up, as long as we stay so for me that's a very good setup. We stay below this low with this high, induce buyers, build up, trap them, there's your, that's the setup I look for, by the way. Every day I'm looking for, and remember, we don't trade patterns, by the way, but pattern recognition is important. Okay, we need to be able to spot these build-ups. Okay, that is what you want to look for, right? So liquidity block forms, build up, trap, and targeting engineered liquidity. Okay, so that's valid. And also to show you guys another example, okay, is if price then does this, by the way, I'll give you guys the same scenario. That is then a valid LB to take. I'm hoping I've clarified now why this isn't with structure, whereas this is. Okay, so I can even write a text. This is valid. This is invalid. Okay, I'm hoping that makes sense. Okay, let's look at some more questions. Okay. I took off so simple to allow the whole time to be its way. Yeah, Mike, that's an extreme LB. What is the important time, for example, 4-hour and 1-hour closures? So it depends if you trade forex or futures. But yeah, the 4-hour, the way it closes, if a previous 4-hour high gets taken, for example, we can see a trade in the opposite direction. Often LB has been used and breaks a high, it leaves liquidity at the lows, right? But price comes and takes internal and you guys join the trade. I want to understand why. After an LB has been used and breaks a high, it leaves liquidity at the lows, but price come and take some internal. Yeah, so that's our strategy. Can you provide an easy way to spot lower low, lower high, higher high, higher low, rather than internal structure? I sometimes have issues spotting this. I don't really look at structure like that. Structural liquidity is the same as engineered liquidity. It's the same thing. Yeah, so I'll give you guys an example on the charts. Let's use a highlighter tool for this. Low, high, high, low, higher, high. Okay, so what have we essentially built once price respects that low to the left. We've built liquidity in the market. So this is engineered liquidity now, okay? In very, very simple steps. It's like this, isn't it? So that might be structural liquidity. It's the same thing. It's engineered liquidity. That's engineered liquidity. Okay, so look what price does. Price comes after we take that high. Look, we come to take that low. Okay, why? Because there's liquidity there. After we've taken that high, are we looking for buys? Absolutely not. And this also shows, this is an LB, by the way. Look, we've taken liquidity. Would I take this trade? No, I wouldn't. That is with structure. Okay, look, break of structure to the upside, comes back down, provides a reaction up. If that took this high, I would have taken that. I think it does. Yeah, that I would have taken that. What time was that? Yeah. And then yeah, targeting those lows. So you can see that the building structure, we're building liquidity. Yeah. Is it Harry? Oh, Hari. Focus on one asset. If it hasn't taken it on CFD, stick with that, man. You're gonna end up getting analysis paralysis. Don't look at the futures if you're trading it. If you don't trade futures, then just look at the CFD. However, I believe personally that CME, the futures data feed, is the most accurate. But yeah, just focus on the CFD. Adam, let's say there is a good entry below inducement low, but price drops violently. Yeah, no, I wouldn't. You want to make sure that price doesn't just come in with volume and take out your inducement low. You want it to essentially pause. Yeah, you want those pauses in the market. Can you look at BTC? Okay, BTC crypto. So I have something marked out. I don't know what. Oh yeah. So you can see how we've induced buyers getting in right now. Again, I can mark this out, but you guys should be able to spot this straight away. Okay, where's my inducement high? There, because it's respected this high multiple times. I can see price essentially maybe moving up to move down. That would be ideal. Yeah, I'd only look for shorts once we've taken out liquidity. And all of this stuff is irrelevant to me until we've taken that high out. It wouldn't make any sense. Yeah, it wouldn't make any sense unless we've taken that high out to go lower. I'm hoping that makes sense. Can you show an example where you took a confirmation entry? Yeah, sure. I mean, a confirmation entry is basically the same as what we've just been doing. So let me give you a bearish example. So this is a confirmation entry, isn't it? That is a confirmation entry. Literally, should have made that a little bit higher, but I don't know what's going on with my chart right now. But yeah, that's a confirmation entry. There we go. Yeah, so once you form an LB, you have a build up. Price then takes that build up, so traps those early buyers. And that's your confirmation entry. Wonderful, bro. Really necessary points. Thank you, Samir. Cool, guys. Any other questions? Any charts you guys want me to have a look at? Feel free. We can look at some charts. Can you just send your chart in again, Dallo? Jason Silver. Silver's been in the news. I would stay away. I mean, I know I've seen it, so I wouldn't even look at silver. Why? Because we're trading at all-time highs. We have no liquidity there. Yeah, we have no. What a move up though. What's so interesting is look at this. If you got in this, wow. If you got in this, so here's an example of an LB, by the way, guys. Buyers induced, buyers trapped, LB, and look how we had buyers get in the market, trapped them. Obviously, I know this is like on the weekly time frame, but that stops massive. But yeah, that's pretty cool. Sellers induced. Yeah, that's massive. What a move up. But yeah, I wouldn't look at anything on silver, guys. I wouldn't look at it. Okay. German 40 please, Euro USD. Okay, you mentioned how you had to study for LB that hold versus don't. Is the valid versus invalid you just illustrated, or more to it to know? Nah, literally that's the ones that I've studied, and I literally train my eyes to see those LBs, and if it doesn't hold, it just means my trade was invalid. What lot size do you recommend for beginners? I traded 3 minis. Nah, no way, bro. 3 minis is crazy for a beginner. 3 micros, more like it, Mike. GBP CAD. Let me pull it up on my chart, bro. GBP CAD. So always go from the higher time frame, bro. That looks ugly. Whoa, that is, what is going on there? So we're moving into an LB. This is why I also don't like Forex that much. Very slow. Like, look at this PA we've had. Cool. So if we just frame something out here, induced buyers. You can see how we've had loads of buyers induced. Yeah, until this high goes, bro, I wouldn't look for anything. Even so, yeah, I wouldn't look, but shorts look good. I mean, if we look to the left, we've taken out these highs, left those. Yeah, I would stay away, bro. Bro, TJ, why is it ugly? Look at it, bro. Does that look nice to you, bro? Look at that. I'll give you an example. Look at that, okay? Watch this. So this is the PA that you're seeing right now. Look at those wicks on both sides, respecting both sides. Versus, if I show you, I was actually looking at German, is it 30 or 40? I can't remember. There's something like this, bro. Look, clear, taken, left liquidity there, induced, whoops, induced sellers, build up at the highs. Hopefully we can see something like this, you know. Look at that compared to the ones I was just looking at. So you just got to look at it from a higher time frame perspective. I don't see the webinars on WAP. Jason, they are there. Just look properly, bro. Harry, as I see liquidity not taken on CFD gold, so ignore the trade and wait for another setup. Yeah, bro. Liquidity on both sides. Why would you trade that if we are not taking any trades till liquidity is taken? No worries, Craig. Take care. If maybe Adam can explain. If there's build up before taking low, that's good, but if it took it without build up, you'll be yeah. You want there to be a build up. Yeah. Well, can you check German 40? Isn't it the same? Isn't it similar? Yeah, bro. We've induced sellers. Looks like we're so bullish. Looks like we might have. Oh, there's a liquidity block there as well. Yeah, hopefully if we come back below these lows, I might be interested in taking those longs back up. Yeah, from a weekly standpoint. Or price can sell off all the way to these lows. Yeah, there's engineer liquidity there. Nothing to look at the minute. Might see a bit of a sell-off and then to the highs we go. Oil, WTI. Is oil not? What's oil? What is oil on the futures? 1 second. Ah, here we go. Oil. So this is oil. Oh, bro, again, look at that. That is super ugly. We're just literally building liquidity. Look, we've got liquidity there. We're in a range. That's ugly. I'd stay away. Okay, guys, good question, Mike. Adam, your opinion on futures versus CFD. Okay, so if you are a beginner, okay, and you are looking to go through the prop firm route, okay, I would recommend futures. The cost for the account is cheaper, okay, way cheaper. So for a 50k, sometimes you can buy it for like 40 bucks, yeah. And payout, the way to get to a payout is easier. Obviously, there are rules to both CFD versus futures. CFD, there's no consistency. You can hold to target, higher time frame targets, hold overnight. So there's benefits and cons to both. But in my opinion, futures is more volatile. I tend to focus on just 2 pairs for futures, so I'm limited rather than CFD where you can trade loads of pairs, which I don't like to do. So yeah, man, I would stick to for me personally, futures is the way to move, especially if you're a beginner. Which confirmation entry would you prefer? The second one, bro. It didn't take out the high. Wash 1. Which pair will be affected by war? Yeah, the dollar and gold. Which profit firms do you have to reach the profit target within 1 month and then start again each month if not past? None, bro. You just trade till you hit the profit target and you pay monthly. So if it's 40, 50, 60 dollars per month, you pay until you pass. Some prop firms do have activation fees, but generally it's all good. Nah, less is more in this game, Mike. Less is more. Is there any religious problems on futures and CFDs, bro? Samir, drop me a message privately. Which prop firms are you talking about? I tend to stick with Tradeify, Alpha Futures, and Topstep. They are the 3 main prop firms I use. Any other questions, guys? So a backtesting video. I might do one. We'll see. Feel free, guys, to ask any questions. Otherwise, we'll wrap it up here. We've been going for a while. How do we spot inducement highs and lows? Yeah, I can show you a quick diagram showing you that. So I would class this as my inducement high. Why? Because before we broke structure, we created an inducement high, broke structure, we respected it multiple times. That would be an inducement high for me. Okay, and you just flip it the other way around for an inducement low. Hope that makes sense. No worries, Mike. Do you recommend to aim to pass the challenge within the first month or as long as it takes? If you're a beginner, just for as long as it takes. It's still cheaper than a CFD account. About journaling. Journal every day, bro. Do a pre-market analysis and then an end of day analysis. And if you took a trade, see why it was a win and why it was a loss. Adam, you said Alpha, Top Step, and Traderify was the last one, bro. Traderify was the last one. Cool, I'll take a few more questions. This is not a question, but I would like to tell you that I joined IE because of your video. Yeah, let's go, Unides. Love that. Love to see you in the community. Let's go, bro. But yeah, guys, look on Charts with Adam. I have 3 breakdown videos on NQ as well. Elijah has end of day analysis. Look at those, and look at, if you're in the WAP, obviously look at what you have there. Over 100 hours of content, you know, so that will help you. And just take your time. This is a journey you need to appreciate. You need to be able to go through the hardships in order to see the successes. Okay, this journey is not easy. Okay, there's a reason why only 95% why 95% of traders lose money within the first 90 days. Most give up. If you really want this and you really want it to be in this game, you have to put that work in and understand this strategy. That's the first thing you need to do. You need to dissect this strategy. If I share my screen, I will show you guys what I did. Okay, let me just quickly share my screen so you guys can see my Discord. So here's an example where I have my own server where I've literally broken down liquidity, the model, external versus internal, inducement from the left, inducement highs and lows, traps, etc. So yeah, guys, come up with something like that yourselves, you know. That is something I would recommend. Break down the strategy, dissect it from traps, LBs, engineered liquidity, inducement highs, inducement lows. Just break each section down. You know. But yeah, what's your thought in flipping? Nah, don't do that, bro. Don't do that. So we are looking at something like this on the daily. Possibly, bro. Yeah, possibly. What 2 pairs do you recommend? It depends what assets you trade. For me, I look at gold and NQ. If the Da Vinci setup wins, say it's 8.5, why take fewer trades? Why not just take DaVinci trade verse. Yeah, DaVinci setups sometimes take time to form. Sometimes they're not always present. So that is what you should be doing. Those are high probability setups. Jason, I'll find out for you. I'm not too sure about that, but I'm sure if you've got WAP access, you should be able to see the webinars. Can you talk about emotions? Yeah, emotions. Massive one. You've got fear, greed, FOMO. These are all emotions that if you have those, it will come out and it will reflect in your trading. Emotions is a massive part of this game. I used to have I never used to have the fear of missing out or FOMO. I used to have greed, and tackling greed and looking at why we don't need to make money every single day in this game. Money is a byproduct of you taking high quality setups. The money will come. Okay, we do not need to trade for money. Okay, we do not need to try to get, I need to make $5,000 today. You literally trade what the market gives you. For my swing trades, NAS 100, US 30, and if I see a build up on a higher time frame on like Euro USD, for example. Hamza, you need to just work on yourself. Doubt comes from the lack of back testing and confidence in the strategy. You need to be confident in your strategy. If you're not confident in the strategy, you will always have doubt. And the only way you can tackle that is by back testing, forward testing, collecting data. You see something 1,000 times, you will be more confident and inclined to take that. Cool, guys. I can go until like 6 p.m. So that's what 1 p.m. Eastern Standard. So it's up to you guys. We've got another like 9 minutes or so. Feel free to ask any questions. Yeah, that's just Sikiniot. That screen. You haven't had enough time to train your eyes. You need way more back testing time. I live in the UK, bro. Shitty London. This webinar is recorded. Yes. No worries, Etagua. How long do you think it will take to master this strategy? I mean, it took me about 4 to 6 months. Sometimes it might take longer. So this is per the system, right? Praful, yeah, that's per the system. Up to you if you want to take it though. I live in London, bro, Samir. 4 to 6 months is average. Can you share your trading view chart? Looks good and wanted to use your settings. I'll put the chart in the general chat, bro. The settings, I'll put it in the general chat. I would like to know more about the breaks of structure and how our liquidity block remains valid in a scenario, let's say a 4-hour chart. So if I go to a 4-hour chart, here's a 4-hour chart. So for example, here is a liquidity block. Here's a liquidity block. Price broke to the downside. Okay, now look on the 4-hour chart. This is now very important here. Would you take this? First of all, the stop's crazy. But yeah, I wouldn't be taking this after we've taken a low. Yeah, so think about it logically. How do you know that a high is a structured liquidity? Well, if it's been respected, right? Look, very simple. this whole area, or I think it's called supply, has been respected and moved away. We now have liquidity above here. Simple stuff. That's the build under it. Yeah, if it respects, right? Yeah. If you had to start over, what would you do differently? I would look at my risk management. I would take that very seriously. Risk management is what will keep longevity in this game. Without risk management, you will keep on blowing accounts. You'll never get to a payout. If you do, it's very lucky. You might get one and not get another one. There's no consistency. I would focus on my risk management, looking at my exact risk per trade, and I will always look for high quality setups, not just take a setup because I see this model. And literally, like, I've seen it time and time again. Someone would look for this. Oh, here's a perfect example, by the way. So here's a perfect example of where it looks lovely on the lower time frames. I'll show you guys an example on the charts. Where was it? Oh, let me try to find it. It looked lovely on the lower time frames. I think it was here. Yeah, I think it was here. Yeah, it was. So let me show you guys an example. So you cannot trade liquidity as a pattern. Okay, we have to use our logic. I've seen some people do this. Liquidity block. Go to the 5-minute. So I've seen some people do this, for example. Liquidity block, entry, and then targeting those highs. I've seen some people do this without considering that we've taken highs from the left. Why would we be looking for buys? Just because the model plays out on a lower time frame doesn't mean we need to take it. That's what I would do differently. Yeah, only look for high probability conditions and setups. So that LB is invalid because it induced sellers before on the H4. Which one are you talking about, Gabba? Can we use this for stocks? Yeah, I haven't really looked at stocks, but I know some people that have looked at like Tesla and stuff like that. Stocks, crypto, futures, yeah, you name it, it's there. Yeah, because we trade liquidity. Liquidity is what is the fuel for the markets. It's in every asset class you will see it. So I don't really need to know what's going on fundamentally, to be honest. I take a peek at where news is to avoid it. But yeah, I would only look at the charts to spot what's going on. And this is a nice way to end the webinar actually, because if you look at, I believe in April we had those tariffs, yeah, around here. Look what the market did, and this is so precise of our strategy. Watch this. Buyers induced, we reacted from here. Watch this. Inducement low, liquidity block. Look where the news sold off to. Engineered liquidity to target, and Abed caught this move, and this is where he made like 6 figures on it, on this move up. See, when you've got crazy, 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 yeah, and that just shows you how the technicals are important. Liquidity is important. Yeah, LB, build up, trap, and there's your engineered liquidity above. Yeah, I just don't trade news, so I wait for news to print, and that's it. Simple as that. Don't take any trades before news, unless price is far away and you've gone to break even. Yeah, that's correct. If you go wash, if you go all the way down to a lower time frame, you'll see that low is a build up. Yeah, well done for spotting that. I hope you guys have learned a lot. And I hope you guys found this useful, guys. I tried to make it a bit educational, especially for the beginners or new to trading and how we trade. And if you're in the WAP, I hope you guys can watch this back. But lovely stuff, guys. I'm gonna give it a break now. I hope you guys have learned a lot from this. Really appreciate the feedback, and I will see you guys on Monday. We go again. We go again on Monday. Same thing, in and out. Appreciate it, boys and girls. Yeah, feel free to drop me a message if you have any other questions. But if you're in the what? Yeah, bro. Yeah, yeah. Always thanks, Marco.